So in this video, I want to talk to you guys about how I took a healthcare SaaS company from $0 to $30,000 in monthly recurring revenue using Google search ads. And that monthly recurring revenue has continued now for the last 3 trailing months off of only the initial $20,000 in spend. We actually had to shut off ads to kind of let the operations kind of do its thing. They couldn't handle more lead flow. So let's just kind of talk to you about the product, what role that played into this growth, why we chose PPC ads versus Facebook. I want to screen share and show you guys some of the ads, the targeting, things like that. And I want to talk to you about how we structure PPC campaigns specifically to get you the best results. So firstly, the product for this business, as I mentioned, it was a SaaS company. It was a healthcare SaaS company. Specifically what they were doing is they were connecting phlebotomists from people who wanted at-home blood draws, okay? So very popular product. There was a lot of demand for this, especially following what transpired over the world over the last 5 years. The company had basically spent the last 5 years kind of in a development phase, building out the SaaS, the tech, the platform. Then I met them right at kind of their go-to-market strategy. And what's interesting is the founder was actually a friend of mine prior to us working together. We had been kind of fighting and arguing back and forth for like 6 months. He was honest with me. He goes, I think all of you like kind of internet marketers are kind of like sleazy salespeople. You know, you don't really provide any value and that this product is going to be viral and kind of grow on its own. And when I told him, I said, totally agree with you. A lot of marketers are a little bit slimy. But there's 2 types of marketers. There's number one, there's corporate marketers, which are kind of like fluffy. They just spend a bunch of money. They don't track if anything is really working or not. And then there's direct response performance marketers like myself, where we're measuring every single penny. We have total integrity, transparency, and accountability, whether or not we are generating revenue in excess of what we are investing in advertising and what we are being paid. So there's full transparency there. So we kind of had this back and forth, and I told him, I said, you need to advertise a little bit just to get the kind of momentum going, just to kind of get the virality working in your favor. You need to get your first 1,000 customers to start like telling people know you exist. I told him your bottleneck is obscurity. And, you know, he was going to post on all these blogs and things like that. And he was talking to all these PR agencies. And all of those marketing strategies required him to go into the red before he then became profitable in the future. I said, dude, I can make you a funnel to where I put $1 into advertising, get $2 out same day, and then you get the lead and you get the customer and you get the word of mouth and the referrals of that customer, hopefully telling people if we deliver on our promise, which the product more or less did. He had an incredible product, and I knew that that was going to take off once it reached enough people. To get him started, basically all we did is we looked at what was his average order value. We found it was about $200. So the first thing we did is we tested $1,000 to spend on Facebook and on PPC. Very quickly, we started getting traction from the PPC campaign, so we cut everything out and we started spending more aggressively on those campaigns here. Prior to me walking through this PPC, I want to give a shout out to Chasen Gersh, who's my PPC guy. I use him for all my PPC stuff. He's managed about $100 million in spend profitably, so I don't want to take credit for all this. He was a huge influence in this campaign and us being successful here. So before I kind of get into like the tactical kind of granular level of things on the ad account side of things, and I start screen sharing, I want to talk to you about the difference between search ads versus kind of interruption-based ads. So search ads, it's people that are already looking for your thing. So it's very, very higher quality traffic. Interruption-based marketing is you're converting a whole nother stranger. They were just going through your day, you interrupted them, and you just pulled them into your world and you sold them on something, okay? Because this is an interruption, you can scale this very, very quickly. Okay, if you have an ad that's working really, really well, you can gas that thing up because you can show it to anybody. It's proven its ability to convert a certain percentage of those that's profitable for the business on your thing. Search ads is a different story. It requires a little bit less skill in my opinion, but it's people searching for your thing. So there's a much smaller limited amount of those people, okay? So specifically on Google Ads, there's a metric called the impression share, which is of the amount of queries that you have, what percentage of them does your ad show on? And once your impression share starts getting high, you're running out of queries. Now, you can't really just say which one is better for your business because it also comes down into ultimately the competition for those certain eyeballs that you're going after. In some industries, for instance, you might pay $20, $30 per click to get it in front of somebody that's searching for that keyword because fundamentally all marketing competes on an auction. If there's more people bidding towards those particular eyeballs, the price goes up. If a marketplace of a certain amount of queries or a certain amount of eyeballs on Facebook is underserved, there's not a lot of auction people trying to go after that, your CPMs will be lower, your cost per click will be lower. So it just depends on where the bigger arbitrage is. So test both for your industry. You can do keyword research on Google Ads to kind of get a sense on how competitive it is, how much cost per clicks cost. You can assume a conversion rate of 1 to 5%, and then you can see if that makes sense for the unit economics of your business. So we spent $1,000 on Facebook, we spent $1,000 on PPC, we got a ton of traction on PPC. We said, let's just focus all on this and go in on all this. When you're structuring your campaigns on PPC advertisements, it's a lot different from Facebook. You're interrupting somebody, they're completely new to your world, you're just converting somebody that wasn't otherwise interested in on your thing, you just show it to more people. It's pretty simple. You have one funnel. Google Ads is a different different story as you're trying to find these queries. So for instance, let's look at the Google advertising account here. We have two campaigns. We have blood work and we have phlebotomy. Now, why is that? You want to be thinking like Google search ads is completely different psychology, okay, versus if you're more familiar with interruption marketing on Facebook, things like that. But you want your ads and you want your landing page to match the messaging of what that person was searching for. So for instance, if somebody searched for blood work, they're going to get blood work ads, blood work landing pages. If they're searching phlebotomy, they're going to get phlebotomy, landing page, phlebotomy ads, okay? You basically find, like Google Ads, the way you scale is you try and find these kind of different channels. You find these different, like all these kind of related search queries, and you try and create a funnel for that, and a landing page for that, and an ad for that. You scale it up until the impression score, you just can't go any higher, and then you just try and find more and more of those channels. You can scale horizontally, or you can start looking for wider and wider search terms to kind of match that thread. For instance, let's say blood work was really working well for you. You could try and expand to phlebotomy, or you could expand blood work to go more broad. So for instance, mobile blood service delivery near me, only so many people searching for that. If you wanted to scale that campaign, you could just do blood work, and you could see if you could convert that. Now it's going to be a lot harder. There's going to be a lot of queries that aren't as high intent, high as engaged. So it starts getting harder as you start scaling. You start getting to colder and colder audiences that have less affinity towards your ideal customer. So within this campaign, blood work, we have two different ad groups. We have at-home phlebotomy, mobile blood work, at-home blood work, mobile phlebotomy. Okay, so within each ad group, that's where you define all the queries of who you want to be targeting, okay? And then specifically, you're looking at to see which kind of queries produced you with the highest return on investment, and then reinvesting into those, cutting out all the spend that didn't yield you the result you want. So for instance, mobile blood work, those were all similar. We wanted to create different ads to specifically for people that were looking for those terms, mobile blood work, okay? So you can see we start getting mobile home blood draw service, mobile blood draw service near me. We used phrase match. It's basically, we don't want broad match because we specifically want to narrow mobile blood draw service near me. So all of these were working for us within KPI. We had a bunch that were shut off here that we did turn off that weren't yielding any results. So let's take a look at the second ad group here. So the second ad group here we had was at-home blood work, okay? So we had concierge blood draw, home blood draw near me, home blood draws near me, at-home blood draw service near me. So we basically just try to group all those together. Then you can look at some of the ads that we were running. You can see that we have home blood draws, okay? If you're ever selling one-to-one, you know how important it is for you to use the same verbiage that your prospect uses to define the problem. If you're speaking in a more sophisticated way than they're accustomed to speaking, or less sophisticated way, that can make or break the sale. So we're trying to kind of match our avatar, meet them where they're at, use the same type of verbiage that they used in their query to mirror in our landing page and our ad. Okay, and now we had one more campaign that I'll show you, and that was for searches related to phlebotomy, okay? So we were trying to match our prospects' language there. And the challenge that we encountered with this phlebotomy campaign is that there were so many negative keywords that we had to add on to basically strip away all the people that we didn't want, for instance. So a negative keyword, it's kind of self-explanatory, but it basically just means like it is a filter. It's removing certain queries from our ads being shown. So for instance, like phlebotomy certification training is not our ideal clientele. Phlebotomy is kind of this way for people that are kind of like unskilled laborers making 10, 20 bucks an hour to go from making 30, $40 an hour rather quickly. So there's an enormous amount of queries of people like trying to find phlebotomy as a career path rather than needing it as a service for them. So that was a challenge we encountered. We just kept adding on more and more and more negative keywords, but still it just wasn't converting at the same rate as our blood work campaign was with cold traffic. So here's kind of just what the ad just looked like for you guys, just if you want to see it, just super simple stuff here. Here was the landing page that we had them built. Now they had two paths here. They had book your visit or see if I qualify. They had a questionnaire, type in your address, date and time, and then ultimately it led them to a page where they could check out, put their contact, their credit card information. And again, for this specific campaign, the average CPA was about $75. So they made a profit about $30 per order because the AOV was about $150. And the other thing that's really cool about this business is that it's very, very recurring and it's not seasonal. So people need their blood work contingent upon a bunch of other factors. And the churn is very, very low. Unless somebody really messes up your blood draw, you're not really going to bear the cost of switching. We were targeting more on this Facebook side of things. We were targeting people that were on TRT, people that had dialysis, people that needed very ongoing blood draws ROAS on a quarterly or monthly basis. So that even amplifies the return on advertising spend even more. But to acquire that customer for the first time at a profit for a recurring based business like this, not even in taking into account, all the word of mouth, the testimonials, things like that, we were already profitable. So it shows you the power of a break-even funnel. I tell all my clients all the time that if you can have a break-even funnel and it's not super hard to fulfill on, like it's a digital product or just something that isn't super hard to fulfill on, you want to spend as much money as humanly possible, because ideally their first experience of working with you, a big percentage of those start to ascend and start to want to work with you on an ongoing basis. And it's basically free kind of marketing dollars for you. This founder, he came from the traditional kind of software and kind of finance world. They're not really familiar with like paid advertising, performance-based marketing. And most software companies, they're going to spend $300, $400, $500 to acquire a customer for the first time and hope they glob up enough market share that becomes profitable as time progresses. And over the last 5 years, you've seen companies like WP Engine with Jason Cohen or Russell Brunson or Alex Becker with Hyros, to where they bootstrapped the company leveraging these types of strategies and created some type of self-liquidating offer, some type of offer that paid for the advertising expend plus a little bit of profit, and then a percentage of those upsold into the software that they were selling and had billion-dollar plus exits. It's the power of combining the direct response marketing world from these incredible business models that have a lot of leverage, like these business models like SaaS here. So anyway, that is pretty much everything in a nutshell. I hope it was valuable for you guys. And again, if you want to talk to me or somebody on my team about potentially growing your business through paid advertising, all you have to do is just fill out your information below, and we'll be in touch soon. Thanks so much, and talk to you then. Bye.